mean, I'm not really sure how high it can go. I think it'll go higher than people think possible. But when you hear, the head of TD Securities, I think his name is Daniel Gali or something along those lines, come out and say that he estimates the London Bullion Metals Association silver free float, that would be the stock of silver backing the treasuries, stands at its lowest levels in recorded history, only to about 150 million ounces or so. That's less than a single day's worth of trading volume for spot silver in London. Um, when you see the lease rates in London soaring as high as 8 or 9%, I mean, I've never seen that before. Those are that's the rate that would cost to borrow silver to cover a contract, let's say, or to short it. When you see that, I mean, look, silver's up almost 35% this year as it is. When you see the commercial banks come in and they last week were short almost 80,000 contracts over 400 million ounces, and they built that position at 37.50. So anything above 37.50, they're bleeding.
Silver's breaking out, and not just on the charts. Lease rates have surged past 9%, inventories are vanishing, and for the first time ever, there are no SLV shares left to short. The physical market is screaming stress while the paper market is bloated and exposed. In this video, we break down why silver is being called the most undervalued strategic asset today, and why the biggest players, including China and India, are scrambling to buy it all. If you think silver's just another metal, think again.
At over $400 million per ounce, per dollar, they would be losing over 400 million. So, what is silver today? Let's see. Silver today is roughly 38.30. So they're down about 80 cents. They're down $350 million on that trade. When you see the fact that yesterday there were zero shares of SLV to borrow to sell short, I've never seen that before, ever. Telling you that the market is getting very, very tight. When you see the exchange for physical fee surge by almost 250% in just 2 days, that's the cost to swap silver from a futures contract to physical or physical to futures, either way. That indicates massive stress in the silver market. All of these things are pointing to silver, including breaking right there. It's right at the breakout point of a 45-year cup and handle. It's broken through a falling wedge. Everything technical, everything in terms of the LBMA, the supply, the delay. The London Metals Association is a T+1 market where T is the trade day, +1 to settle. On the third day, the bar should be moving. They've been as delayed as 8 weeks, citing a shortage of manpower and trucks. But as we heard, they have 155 million ounce free float. David Jensen does an amazing job pointing to the LBMA statistics, and he says they trade as much as 1.9 billion ounces a day on paper. 1.9 billion with 155 million backing it. 1.9 billion ounces would be 3.5 times annual global mine supply, and in this case, over 12 times the float. And then they get all these deliveries, and sorry, we can't move it in one day because the Bank of England doesn't have enough in the way of trucks or manpower. We're 8 weeks delayed. That almost is that break, that default. I think the commercial banks realize this is an existential threat. I think this is a game that has been exposed by the big players around the globe. India, China. India and China alone are buying so much gold and silver, it's ridiculous. And India's bought about 900 million ounces in the last 5 years of silver. That's more than the LBMA has total. And when you talk about, remember, most of the silver in the LBMA belongs to ETFs like SLV, who's controlled by BlackRock and JP Morgan. There's so much that you can look at that point to silver really being on the verge of exploding. And silver, I mean, China had just confirmed this last week with both Keith Neumeyer and Sean Kun. Keith is First Majestic Silver CEO, and Sean is the CEO of Dolly Varden, and they both said that China is flying all around Mexico and Latin America, Peru, and buying doré and concentrate directly from the miners, and have increased their buying from artisanal miners all around the world, from small miners. They'll buy everything that they can sell because this disintermediates the marketplace. So they join in with the Western banks in shorting the price on COMEX, and then they go all around the world and they buy right from the miners doré, which is a crudely refined bar. They buy concentrate, which is a byproduct of that refining, and it's like a sludge in a jar, and they send it back to China and refine it themselves, or they buy it directly from Mexico, as Vince Lancy says, long before it's even called silver. They're just buying the doré and they refine it themselves. They're the second largest producer of silver in the world. They're doing the same thing with gold. They're the largest.
LBMA silver float is at historic lows, approximately 150 million ounces, while 1.9 billion ounces trades daily on paper. Lease rates hit 9%, a major red flag for short sellers. Commercial banks are $350 million plus in losses on silver shorts above $38 per ounce. SLV shares are unavailable to borrow, a first in history. EFP swap fees jumped 250% in 2 days, showing delivery panic. China and India are hoarding silver, bypassing COMEX to buy direct from miners. Billionaire David Bateman invested nearly $1 billion in gold and silver, calling fiat collapse inevitable. Texas legalized silver as currency starting 2027. States are preparing for the shift.
They're buying up everything they can get in commodities. And silver is probably the most undervalued asset on the planet. And to see the length at which a country like China, who produces second most in the world, flying all over the place and buying doré and concentrate, paying double what the West will to ship it back and refine it, should tell you all you need to know. But then you see the second largest delivery in the history of the COMEX market on the May contract, huge amount in the June contract, huge amount in the March contract. Month over month over month, we're seeing massive deliveries into the United States. Who's buying it? Who's taking possession of it? It's a lot deeper than tariffs, I can assure you that. Yeah, I think we're really close to that moment, really close to that moment. But this is a high stakes game that will probably take longer than most people can deal with. That nanosecond thing again, you know, you can't look at it in terms of nanoseconds. Play the long game like China is, who's trying to go all around the world and accumulate commodities for their next growth spurt within the BRICS. They just bought the London Metals Exchange a few years ago, all the base metals, their Belt Road, all of the 155 plus countries that are resource rich and underdeveloped. That's the whole premise of the Belt Road. All of this stuff points to commodities being massively important. And I'll tell you what, John, in my mind, silver is not industrial, it's strategic. And by the actions of these countries, it's proving that. Yeah, I think silver might be the best play of a generation. And the word I think of when I think of silver is asymmetrical. Very low downside, huge upside. So yes, it's a place I would park my money right now for sure. There's a man named David Bateman. He's a billionaire. And on Twitter, he wrote this, and I'll just read it verbatim. Here are the reasons I invested close to $1 billion in precious metals over the past 6 months, including the purchase of 1.5% of annual global silver mine supply, 12.69 million ounces. The global monetary system is about to collapse, the Great Reset or the Basel Endgame. The biggest credit bubble in history will soon pop, 300 trillion. There is no way the U.S. can refinance its 28 trillion in maturing treasuries in the next 4 years without an obscene amount of printing. Trump tariffs are hastening the collapse, and it's by design, to your point. Gold and silver are the only meaningful life raft. Physical possession is everything. The whole world right now is a sophisticated game of musical chairs. The chairs are precious metals. Now, he writes this, I don't, so all you crypto people don't get mad. Crypto is a psyop. Those who purchase will have no chair when the music stops. Real estate, crypto, stocks, and bonds will all lose significantly compared to precious metals. The banking system has been meticulously designed to seize your assets to buoy up a collapsing banking system. See the great taking. You have zero counterparty risk with precious metals. I'm up 20% already on most of my purchases. This is not a drill. Your grandkids someday will either muse or lament this financial decision you are now faced with. Do not fail them. Well, that comes from a billionaire. And usually when you're at that level, you are also very well connected to the information. So take that as what you will. David Bateman, he is on X. You can go to and check him out yourself. He put that on there a couple months ago, but I thought it was very relevant in terms of discussions, any discussion on silver right now.
The silver market isn't just tight, it's on fire. With global supply drying up, central banks hoarding, and billionaires betting big, this isn't just another bull run. It's a signal. If the paper game breaks and you don't hold the real thing, you're out of the game. Stay informed, subscribe, and remember, when the system resets, silver may be the safest seat left.